Railroad Accounting Principles, Volume 1, Chapter 2, Effects and the Principles on Specific Regulatory Application, General Purpose of the Costing System. The chapter illustrates the combined effects of the principles on the regulatory applications of the general purpose costing system, while the preceding the chapter organizes the principle. The chapter organizes the application, including the general purpose costing, with the reference of the appropriate principles. Specific regulatory applications. The Interstate Commerce Commission has established the railroad adequately revenue cover the expenses to attract capital when it is returning an investment equals exceeds the capital rate. The appropriate railroad entity of the financial reporting using the determinant run of the investment in combination affiliated with the railroad's railroad related affiliates. The objective is to measure all the revenues, expenses, and assets of the single unit of the railroad related portion of the complex conglomerate organization entity principle. The determination of how to report the activities of specific affiliated companies may be affected practically principle to account the properly transaction affiliated non-railroad related organization prevent the distortion of the return of the intern railroad related to any of the investment on its investment transaction of all parties outside the railroad entity must be recorded at fair market value. For example, its railroad parent corporation owns 75% of the fiber optics company. That fiber optic company receives the easement of the railroad to the railroad right of way for its fiber optic lines. The granting easement of the must be recorded at the fair market value of the financial statement of the railroad entity, the entity principal. Include income and net investment base of the two components of return of the investment being should be prepared in accordance with the GAAP, except for the one departure reporting in the less than the fully consolidated entity. The net investment base should consist of the railroad related net plant and equipment assessment of the GAAP basis cumulative deferred tax credits. Working in the capital component of the investment base should be developed using a formula to determine the railroad related portion of the assets valuation related expenses and the practical principles. The cost capital generally shall be with the nominal industrial wide rate calculated using the current market rates for the debt and the equity. The current market rate should be used in comparison as the rate of the return by the investor's railroad enterprise during the time of the period railroad which return of the investment is calculated by the casualty principle. For example, a return investment calculation based on 1984 should be compared with the capital determined in 1984. The weight of the debt of the equity components of the rate shall be based on the proportional markets of the debt and equity cost of the capital principle. The cost of the capital shall be industry-wide rate, except for whereas railroad is shown as face material different economic circumstances beyond the control of railroad management. Then those industries such as cases of the cost of the capital rate shall be individual cost of the capital rate if practicable. The maximum rate. If the Interstate Commerce Commission is empowered by the determining rate of the responsible is passed, the Interstate Commerce Commission has measured the utilizing available fully allocated among the other factors and establish the reasonable rates. Presently, the Interstate Commerce Commission has determined that for cases involving large movements of the coal and standalone cost to the appropriate determination simulated competitive marketplace, the Interstate Commerce Commission has proposed the use of different methodology to approximate the competitive marketplace for the other traffic. Standalone costs that have been hypothetically new competitor would incur the excluding of the special entity of the exit barrier cost for over the period of during the hypothetical competitor would provide the needed services. The cost be established either through the use of engineering costs of new facilities or through observation of cost behavior of existing facilities. For example, crew wages hypothetical competitor could be established by either detailed identification of crew requirements of the rate of the pay for each of the position for the current costs incurred by the existing carrier, the casualty, and the practicality principle. In preparing standalone costs, the three major capital cost elements must be calculated. One, the assets to be valued at the current market value at the time of the entity. Two, the annual return at the end of the assets should be determined by the estimating of the annual after-tax cash flows, and when the discounted use of the appropriate after-tax nominal cost capital rate recovered their original cost value. Three, the financial risk of hypothetical new competitor should be represented by the cost capital rate of the employed. Although the national determined rate of must be if a more specific rate is practicable, the cost of the capital practical principles, which is while it can discounted the cash flow principle approach, while discounted cash flow approach is preferably, as most of the cases of other approaches may be used provided to recover all costs which that would incur by the hypothetical new competitor, including the return or the return investment to commensurate the hypothetical competitor's financial risk. The railroad accounting principle is applied to the costing method that is selected by the Interstate Commerce Commission for maximum rate purposes of non-standalone cost alternatives proposed by the Interstate Commerce Commission. It consists of variation adjustment of the cost of the GPCS, General Purpose Cost System. The principle does not require a separate explanation regarding the application of the GPCS when used in a maximum rate case. The description of the principal application of the GPCS is contained in the last section of this chapter. The competitive access, the casualty principle led by the railroad accounting principle to address the incremental costs. Those costs should have been avoided by the railroad, providing that the competitive access not been granted. Competitive access costs should be sensitive to the time period for access is generated. For the long run access granted, the cost should be including incremental capital costs associated with the provisions of the facility required for the access. Direct observation incremental cost for the proportion of the railroad with competitive access is up with the preferred casualty homogeneity principles of the general purpose costing system. Components may be used to the cost obtained by the associated substantial same is used in the direct observation of homogeneity and practicality principles. Railroad must value use of the providing competitive access as current market value, practicality as its valuation and related expensive principles. The railroad whose facilities use their access should be applied to the nominal individual cost capital rate. However, the computation of the railroad specific capital rate is impracticable for the railroad may apply for the industrial wide rate cost as a capital principle. The abandonment and surcharge. The appropriate costs that can be considered for the abandonment and surcharge applications are those that are those costs that are net revenues that could be avoided by eliminating the branch line. To extent of the practical cost of the incurred of the branch line should be identified by the direct observation casualty principle. The costs should which can be avoided in eliminating the branch line traffic which are incurred by the off at the branch line, generally by the estimated use of the average variable cost, the GPCS, the homogeneity principle. Cost projection may be limited to 1 year estimates when the effects are not expected to significantly from a year-to-year practicality principle. The cost should include the opportunity cost for alternative return that should have been earned in liquidation of the branch line reinvestment proceeding elsewhere. These costs are calculated by applying for the industrial wide or industrial nominal cost of the capital rate to the current market value of the applicable disposable cost. The net liquidation value of the asset employed in the branch line assets validation related expense principle. These include the changes of the asset values expected in the forthcoming year as capital gains or losses, determine the net income generated with the continuing operations branch lines and avoided double continuing effects of limit inflation cost capital casualty principles. Minimum rate long-term factor. The relevant costs are those avoided by the traffic subject to the minimum rate consideration does not move the casualty principal components of the GPCS may be also be used in lieu of the detailed costs. The resulting estimates would not be materially different from the more detailed practical principles. Capital costs determined on the basis of the time period during the traffic is expected to move the best alternative use of the assets used in carrying of the traffic. For example, the relative of the traffic moves to the 2 weeks and the idle capacity of the cost could be avoided in 2 weeks. These examples cost of the minimum rate and long canon purposes would be included in the capital cost. Of the other hand, the cost of the traffic which be expected to move 10 years, for example, under a contract which included the capital cost of the casualty principle. The railway cost adjustment factor. The railroad accounting principle believes in the appropriate productive adjustment is necessary to the railroad costing adjustment. Factor 2, measuring the cost and changing accurately. General purposes and costing system. The general purposes are average available with the costing which have the intermediate time orientation such as cost capital including as variable cost of the portion capacity related capital cost casualty principle. The general purpose costing system are variability to measure the change in such in a cost that using the response to change to the output. Intermediate run variability estimated using regression analysis. Regression analysis being reviewed and tested periodically by the Interstate Commerce Commission to keep the current since the changes that occur to the technology, technique, cost, behavior over the time. Review the regression equations that include public participation for the formal process of the data integrity principle. The Railroad Accounting Principle Board considered 4 methods of determination of variable of cost. The cost ecclesiasticity, the cost coefficiency, the 2 methods of percentage value and variable, and 2 methods of percent variables. Recommends the use of cost elasticity method, either the cost elasticity elasticity, cost coefficient, and method of the estimates accurate. How much change the respective change of the input out, change of the in output casualty principle. The railroad accounting principle has rejected the cost of coefficient method of practical reasons due to the incapability of the railroad Form Act and the URCS. The percent variable method of the acceptable use of the linear regression equations produce the results of similar use those casualty cost ecclesiastics. However, the railroad accounting principle board must cost ecclesiastes method before using the percent variable. Methods do not measure accurately how much cost and changes with respect to output changes in nonlinear equations. Continued testing should include alternative regression equation forms and independent variables, even though they may not be any use. The criteria should be used in selecting regression equations. 1. A logical explanation from the casualty relationships. 2. A result of the statistical significance using the current economic techniques. And 3. A judgment and experience necessary to interpret the analysis casualty principle. The expense information shall conform to the GAAP and be collected significantly detailed, identifying the homogeneous cost pools and regression analysis following with the following exceptions. The income tax provision is not used. The variable portion of the total expenses is identified using regression analysis, with only variable portions of expense allocated and assigned to service units. Another exception is the current cost of capital components is used in used as an expense item. GAAP costs may be used by the GPCS for the reasons of the practical, however, the meaningful measures of the value be preferred and used in specific regulatory purposes. When indices of the cost changes are used, the update of the unit of the cost 1 year, the more current year, the indices should indicate the appropriate adjustment for the productivity. The productivity principle. They're theoretically the entity of the government purpose costing system shall be same as the entity to revenue adequacy entity principle. However, they represent the R1 reporting entity may continue to be permitted by the practicality and homogeneity principles. Because significant research identified the traffic density of the casualty factor determination, certain railroad costs of the Railroad Accounting Principle Board recommends the Interstate Commerce Commission conduct additional statistical research to measure the effect of the traffic density of the cost casualty homogeneity practicality principles. The Railroad Accounting Principle considers 2 proposals for the measuring of the effect: collection of certain cost outputs of the geographical cost centers, 2 statistical techniques. 2. Additional expensive reporting geographical cost centers. Information not justified at its time, however, should tie the number of the Class 1 railroads decreasing significantly due to the consolidation. General geographic cost centers might be not necessary. Some independent research also suggests alternative statistical methods for measuring the effects of density and maybe yield more accurately information. Consequently, the ICC should investigate the accuracy of these methods, possible future regulatory. In doing so, the Interstate Commerce Commission should test the alternative regression equation forms, alternative independent variables, as well as in analyzing the most appropriate method of the variable unit cost determination. To maintain current information, the Interstate Commerce Commission should periodically review the general purpose costing system for potential updating of the process of the permitting of all interested parties and to participate. Chapter 3, Effects and Principles Existing in the Interstate Commerce Commission Principle.